Welcome to ShortView Trading. This is your morning market hit for Friday the 8th of May. What matters today for traders? So it was a good day for the bulls yesterday, not a good day for the bears. Tech was strong. The FANG index, if you look at an equally weighted index of those key stocks, just made a new high above its Feb high. On top of that, the Nasdaq broke above levels in the last couple of weeks that have been resistance, whilst the S&P was also strong. Having said that, the S&P remains within that range of recent weeks, but clearly the strength in tech is bullying the bears. But it's key to note here that complacency is back. If you look at a whole range of indicators of the VIX, they're all signaling a return of complacency. The VIX index itself has given back 76% of its gains that it put in late Feb through to the March highs on the VIX indicator. Over and above that, a VIX RSI is pretty much back on sell, i.e. sell for the equity markets. Whilst it's interesting to note that if you look at the VIX and the high yield spreads, the high yield spreads in the corporate bond market are not confirming the move in the VIX. So complacency is back. You can also see that in the put to call ratio, which is pretty much back on sell. And on top of that, the cyclical parts of the financial markets are not confirming the equity market rally. They're not suggesting the cyclical position is mended and is good again, and that we should be encouraged and enthused about it. Indeed, quite the reverse. If you look at US 10-year bond yields, they've really gone sideways for recent weeks. If you look at the airline stocks or the bank stocks, the price action's poor. If you look at leveraged loan prices, a similar message. And indeed, overarching that, we like to look in the medium term for confirmation of the equity market rally from CCC spreads. These are some of the poorest quality and high yield spreads out there, and they're not confirming this market rally. And you'll see if you look at the chart we're putting up in front of you now, that new bull markets start and are confirmed by a narrowing of the CCC spreads, which we don't have at the moment. They're flat on their back, barely moved since the initial sell-off into the March 23rd lows in the equity market. So CCCs are not confirming a new bull market. Other data in the short term is troubling. Complacency's back, volatility's come down. There's a lack of downside put protection. This is a vulnerable equity market. For full details on how we're playing this, please see today's Daily Rag, available to subscribers and on the website. So what are we watching today? All the usual stuff in terms of price action, funding stress, and anything from policymakers. In particular, Lagarde is giving a speech today which will be watched closely. But most importantly, of course, is the US macro data. It's non-farm payrolls day. The consensus is for 20+ million job losses, following on from what we saw on ADP on Wednesday. This will be watched closely, as will the detail of that announcement, average hours worked, payroll, wages, and so on. Over and above that, there's a little bit more earnings, but not much this Friday. So that's it from us. That's your morning market hit for Friday, 8th of May. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Twitter, and/or Facebook. Thank you for listening. Trade well, stay safe.